Hello and welcome. You've tuned into Market Cafe right here on ET Now. Now, this is the show where we break down all of the global developments overnight to set you up with a good sort of backdrop before the day leads into trade today. So starting off, let's take a look at how the US markets have fared in trade. And if we take a look at it, then US 10-year yields have held nearly steady at 4.7%. 30-year yields have climbed to around 5.25%. The long end of that duration curve has really rebounded since the last session's US Treasury Department announcements. So it's really come back and seen sort of a rebound in what went down. Even the equity markets reflected this. The S&P 500 snapped a 3-session long losing streak in the previous session, but the broader week still remains quite weak. S&P 500 and Nasdaq Composite both fell about 1% in trade. That leaves S&P 500 down about 1.9%, nearly 2% for the week, while Nasdaq is lower by 2.5% for the entire week. The Dow Jones is also down about 1.8% week to date, leading into Friday's trade. Meanwhile, the US dollar index is holding in at about 98.8%, close to the 3-month low. This is as the US government looks to ease pressures in the long end of the bond market. Now moving to crude oil, however, oil is back in focus once again. WTI crude surged about 3%, reaching up to $86.83 a barrel. Brent crude also gained up about 2%, leading up to $94 a barrel, almost touching that $94 barrel point. For the week, Brent is up more than 5% week to date, with the key risk being the escalating tensions between the US and Iran, and also uncertainty about the entire situation and the ongoing dispute over the control of Strait of Hormuz, of course. Finally, Asia markets are also largely under pressure. Japan's Nikkei is down about 0.9% and the TOPIX is lower by 0.4. This is all while South Korea's Kospi has declined almost 1%, and the small cap Kosdaq is also down to 2.5%. So that was a quick read through about all of the global markets. But now talking about this week's US jobs data, initial jobless claims came in at about 206,000 for the entire week ended August 15th. This was, of course, below the expectations, which was pegged at 210,000. The 4-week average also stands at 2.4 lakhs, but however, continuing claims did remain elevated at about 1.8 million. This is slightly above the estimate of 1.78 million. So overall, the data does show that initial claims remain relatively resilient, while continuing claims point to some softness in the labor market. But switching focus, the US is also preparing what Treasury Secretary Scott Bessent calls the toughest sanctions in history on Iran. Details are expected on Monday as Washington steps up economic pressures after President Trump threatened economic warfare against Iran and countries helping Tehran as well. Bessent has said that maximum economic pressure could reduce the need for major new military action. However, China, which buys more than 80% of Iran's shipping oil, has rejected the sanctions approach. Meanwhile, Bessent also said that there is a very good chance that the US budget deficit has peaked under President Trump, but the numbers still remain quite huge. The July deficit itself crossed about $432 billion, taking the fiscal year shortfall close to almost $1.8 trillion. Bessent has said that the administration is working on fiscal consolidation and believes that hundreds of billions of dollars could then be saved here on out. He also added that tariff revenues could help, but insisted that the US could grow its way out of the $40 trillion debt that they have. But let's listen into that bite as well.
Anything that happens within a 24-hour period is noise. And I think that once the market understands that we are focusing on fiscal consolidation and that we are trying to bring the market back into equilibrium in a thinly traded market, I think I'm confident that bonds will continue declining. We've got a spike in oil prices today that I don't really understand. Our announcement is for economic action, and I think that the economic action will mean that oil prices will come down sooner.
Okay, that's the word coming in from Scott Besson, but Walmart beat estimates on sales and raised its full-year outlook, but Wall Street wasn't impressed. Shares plunged 9% after US comparable sales grew just 2.6%, below the expected 3.5%. Now, there were positives. The revenue rose nearly 6%, e-commerce jumped 23%, and in terms of commentary, Walmart expects to receive nearly $2.9 billion in tariff refunds, which it plans to use to cut prices.
And on the other side of the world, Japan's headline inflation rose up to 1.9% in July, reaching its highest levels this year. This is as energy costs climbed amid the Iran war, with core inflation coming in at 1.8% in line with expectations. Energy prices also rose for the very first time since November, despite government subsidies, while fresh fruit prices jumped almost 7%.
Shifting focus then, Canada says it is very close to a trade deal with the US, but time is running out. Trump has threatened a new 50% tariff on around $20 billion of Canadian goods from Saturday, and negotiators are staying in Washington with a possible deal expected to cut tariffs on Canadian vehicles, steel and aluminium.
Now, as per government sources in the India-US trade deal, legal scrubbing of the India-EU FTA is now completed. The internal approvals and translations are all underway, and both sides are now on track to sign the trade agreement by the end of the year. My colleague Sumita joins in with more details on this.
That's right. Some developments related to India's FTAs are coming in. So first, let's talk about the India-EU trade deal. We're given to understand from government sources that the legal scrubbing of the India-EU FTA is completed, and internal approvals and translations of the agreement of the text are currently underway, and both sides are on track to sign the agreement by year end. And in fact, on SACU block trade pact that India, of course, is exploring, government sources have told us that the trade pact will have 8 chapters for negotiations. And in fact, as far as sectors that are of interest to India, that includes critical minerals, autos, chemicals, and pharma. In fact, India is looking to source critical minerals that are processed in SACU block countries using investment from India. In fact, negotiating teams and timelines are currently being set up for these trade talks to happen. Remember, this is coming in after a couple of weeks back when Minister Piyush Goyal, India's Commerce Minister, along with his SACU counterpart, they signed on the tour or the terms of reference were agreed upon between both the sides. And of course, terms of reference are agreed upon, and these precede negotiations, formal negotiations that launch. So of course, both sides are looking at launching these formal set of negotiations. In fact, government sources are also of the view that SACU is going to emerge as a gateway to doing more trade with the rest of Africa, and India is looking to increase trade with Africa, and that includes in energy. Meanwhile, there are some developments that have happened on the Kenyan side as well, because a joint trade committee meeting with the Kenyan side that happened in April, and Kenya also, it seems, is keen to do a PTA or a preferential trade agreement with India.
That's the word coming in on the India-Kenya talks. Thank you, Sumita, for taking us through that. But on that note, we'll slip into a very short break. Don't go anywhere. We'll bring you more market cues and everything you need to watch before the India trading session commences right after this very short break.
Back with Market Cafe and bringing you some insights from the latest SEBI survey. Big takeaways coming in over there in terms of what the F&O trading has looked like, what the retail participation is looking like. And speaking of, retail participation is cooling off because active individual traders have fallen 20% from 98.1 lakh in FY25 to just 78.6 lakh people in FY26. Newer entrants have fallen 40%, suggesting that retail appetite for derivatives is moderating. Retail losses have fallen, no doubt, but they still continue to remain massive because the aggregate net losses dropped to 91,685 crore rupees from 1.12 lakh crore rupees in FY25. So moderation, but that number still continues to look absolutely large. 87.7% of individual traders are still losing money in FY26, and average loss actually increased. Despite lower aggregate losses, average loss per individual trader rose marginally to 1.17 lakh rupees. The biggest segment that's taking the biggest hit is the small investors, because 35% of individual derivative traders had no equity holdings and nearly 78% had equity portfolios below 1 lakh rupees, and traders with portfolio below 1 lakh rupees have accounted for 70% of the aggregate losses. Individual traders have paid around 25,000 crore in transaction costs in FY26, and over FY22 to FY26, cumulative transaction costs were approximately 1 lakh crore rupees. Now, despite moderation in derivatives premium turnover, the transaction costs remain broadly unchanged, partly because of the increase in the short-term capital gains tax, the STT, from October of 2024. So these were some of the main takeaways from the SEBI F&O survey. Also listen into what experts had to say on this study and the recent SEBI action against market manipulation.
People who are coming to the market, they're trying to take the easy way out of making money and losing money. And once they lose money, they are skeptical of the market. So we definitely don't want that. We want them to come to the market the right way, make money, and remain invested in the market. Unfortunately, in a lot of cases, this is not happening, and that needs to be curbed. I won't say it is a disaster or it's a crisis of confidence. I don't want to put it that way because it's not the case. But definitely better education of these youngsters to handle the trading in a better way, or maybe start investing in the market rather than trying their hand at options trading, which is extremely difficult without knowledge and without adequate precautions. So I think that needs to be prevented, that needs to be curbed.
People have burnt their fingers at this and lost money. Naturally, their capital is limited, and they're coming back. Naturally, they will find it difficult. That's number one. Number two, a part of this also is responsible because some action has been taken on some fin influencers. The big Pune one, which was over 500 crores of fine by the SEBI, if you recollect, I don't recollect the name right now, but there has been some demonstrated action on big people who they have fined on these cases, and that has also played a role. You asked about FY27, what's likely to happen. This number of traders is likely to come down further because of the data presented, saying even more people are losing. But I think the taxation has gone up in this budget, right? So, which is implemented from 1st April.
But switching focus, Manipal Health has now reported its very first quarterly results post-listing. The company delivered quite a strong operating quarter. Revenues jumped almost 38% on a year-on-year basis. EBITDA also rose 26% to reach 737 crores. Although EBITDA margins did moderate slightly to 23.8% from 26.2%. Now, however, the headline number on PAT looks a little bit weak. Profit was seen falling almost 8% in this quarter gone by. But the key reason for this is coming in from a 89 crore post-tax interest cost. This is on the NCDs raised for the company's Sahyadri acquisition. But adjusting for this and the one-off gain in the base quarter, adjusted PAT actually grew up to 31% on a year-on-year basis, while adjusted EBITDA also was seen rising 30% year-on-year. Operationally as well, the company put out quite a strong performance. Occupancies improved to 90 basis points, reaching up to 65%. Inpatient volumes also jumped nearly 40% year-on-year, while outpatient volumes for the company grew 26%. Now, the Sahyadri acquisition is also supporting growth for the company on overall basis. Revenues were up 13% and EBITDA up 19% as integration across clinical as well as operational functions all continue and boost the performance for Manipal Health on a consolidated basis. Importantly, high acuity specialties are also seen to be driving growth for the company. Congo, our inpatient revenues also grew 45%, with a specialty mix now at 65%. Oncology as a segment was also quite important with a 62% growth, and orthopedics was up over 49%. So overall, in the first quarter gone by for Manipal Health, the reported PAT decline seems to mask a stronger underlying quarter. We've seen higher volumes, improving occupancy, and also specialty-led growth, all remaining the key positives for the company going forward. So on the back of this, in the reporting its first quarter announcement, Manipal Health can also be in focus today. But let's take a look and switch focus into the sugar stocks, which are expected to remain in focus as well. This is after the government has approved a 10 lakh tons of duty-free sugar imports until the 31st of October as domestic sugar prices rise and festive demand approaches. Now, this move is aimed at boosting domestic availability and keeping prices in check. And for sugar companies, higher imports could pressure sugar prices and mill realizations while also reducing inventory gains. Let's get Avi on board to share the details of this with us.
So as you rightly mentioned, there's big news coming in for the sugar sector where the government has amended the sugar import policy and has allowed for duty-free import of 1 million tons of sugar. However, the import beyond the 10 lakh metric ton quota will not be applicable under this exemption, and this exemption is in place until the end of October, which is the 31st of October. So why has the government done this? This is to make sure that the rising sugar prices cool off, and it was starting to become a growing concern as the festive demand is also approaching. That could have worsened the situation. So the supply has to be increased, and that is why the imports have been allowed at duty-free level. Also, there has been a restriction on the exports of sugar, which are under restriction till the end of September. So what will this impact have? This will ensure that the supply increases in the domestic markets to meet the growing demand, and the inventory gains that the company were expecting might shrink a bit, and so leading to which we can see some profit booking in the sugar stocks for the day. So big news coming in for the sugar sector where the government has allowed duty-free import for 1 million tons of sugar.
Okay, Avi, thanks so much for taking us through that. So yes, the sugar sector will continue to be in focus. Over the last 2 days, we've seen unprecedented gains on some of these names like Balrampur Chini, Sri Renuka, on the back of a supply glut from Brazil as well as Thailand. But today, the news has reversed. So let's see if there is any regular profit taking as well as reaction to this news. But shifting focus then, let's take it across to my colleague Rabinder, who's joining us with a list of all the stocks to keep on your radar for today's trading day. Rabinder.
Well, yes, Neva Bupa can be in focus as insurance regulator. IRDAI has warned Neva Bupa for non-compliance with expense of management limit for FY25 and directed the company to not to open any new place of business for the next 6 months. Tata Motor passenger vehicle can be in focus where operation at Tata Motor Sanand plant has resumed after the Gujarat flood, and the company estimated damage is at 35 to 40 crore. Tata Steel has acquired an additional 23% stake in TM International Logistics for rupees 335 crore, taking its total holding to 74% in the company. From the textile space, Sanatan Textile can be in focus as Sanatan Textile has commenced commercial production at its company's expanded technical textile facility at Silvassa, and the expansion doubles capacity for 9,000 MTPA to 18,000 MTPA, taking the total yarn capacity to 488,250 MTPA. Torrent Power can be in focus on the back of the management rejig, where Torrent Power has appointed Vikas Poddar as its new CFO and KMP for the with effective from 21 August 2026. Krishna Institute of Medical Science has entered into an operation and management agreement with Orivia Hospital to manage and operate its hospital. Keep an eye on Diamond Power and Infra, where Diamond Power has entered the copper cable segment with commercial production starting a new wire drawing and cable line with 1500 MT per month capacity. SPR Auto can be in focus where SPR Auto has successfully closed its QIP, allotting 23.36 lakh shares at 4,280 per share to eligible QIPs, raising around 1,000 crore. And lastly, Good Luck India can be in focus. Good Luck India will be trading its ex bonus today in a 2:1 ratio with the adjusted closing price at 478.33. So back of this, Good Luck India can be in focus.
For taking us through that list, but we've got a bunch of other stocks also which are going to be in focus. Starting first with Wellspun Corp, a major positive coming in for that company in the form of its largest ever single order win. This is worth about $1.8 billion, translating to 17,200 crores for the supply of pipes from its manufacturing facility in US. The RailTel has also bagged a 165 crore order from the Western Coalfields. This is for setting up of an MPLS VPN network, a positive order win trigger for the company. Walchanand Nagar is also in focus after receiving an order from the Vikram Sarabhai Space Center. This is for the Gaganyaan mission, and this order covers testing and supply of HS200 motor case segments. And lastly, we've got Satwik Green Energy having secured a 190 crore order for the supply of solar PV modules, giving visibility to the company's renewable energy order book. But also going to be in focus today is Auggmont Enterprises. making its stock market debut, hitting the primary markets with a 824 crore IPO, which is going to be opening for subscription. The issue is comprising of a 620 crore fresh issue and a 205 crore OFS, with the price band fixed at 750 to 788 rupees, and the minimum retail investment over here stands at around 14,972 rupees. So let's take a look at what Auggmont does. First of all, the company operates across the gold and silver value chain, from spanning procurement and refining to bullion trading, digital gold, jewelry manufacturing, and also international sales. At the upper end of the price band, Auggmont is looking at a post-IPO market cap of around 7,200 crores, with a post-IPO price to equity of about 20.7 times versus 18.9 times pre-IPO. So we're seeing that Auggmont is going to be offering exposure to an integrated precious metals platform, but with a substantial portion of the IPO going towards working capital. We are going to be tracking how growth, inventory efficiency, and return on capital for the company plays out in the quarters coming in as well. So that's the take on Auggmont IPO.
Okay, that's lots to watch out for in terms of all the stocks that are going to be buzzing, as well as all the action in the primary market. So keep a close eye on all of that. But with that, we'll wrap down this edition of Market Cafe. Thank you so much for tuning in, but keep watching ET Now, because you've got the next show coming up, and that is all the action ahead.